Hey everyone, hope we're doing well and welcome back to a brand new Sunday Sessions video. If you're new to the channel and you don't know what this is by now, every Sunday before the markets open back up, me and Luke, we just run through the markets and we show you the best investment opportunities that we believe are going to happen in this next trading week. We're going to run through some analysis, show you what we're thinking about those pairs, and finally give you some predictions on what we believe the price of that market will do over the next trading week. So jumping straight into it, on this screen now, I've got the Australian dollar to the US dollar loaded up. Now, last trading week, this was actually a pair that I watched religiously. I thought that, quite simply, it had the best movement out of all markets. It was the most tradable pair for me, just because most of the other pairs were quite range bound. They weren't showing much of a trending market, whereas this was showing longer term holds as well as shorter term holds to be involved in. So looking here, I've made use of the 3-box strategy. If you haven't seen that video yet, check it out and you'll understand exactly why I've marked out this chart the way I have. So just a quick run over, our blue box represents our impulsive wave. So once price traded down into a long-term demand zone, we accumulated and now we've reversed the trend. We have come down and hit the point of interest that we wanted to hit on this downside. Now we've done that, we are free to start making a bull run. So we've had an impulsive wave up. Within this impulsive wave, I've identified a demand zone. This is the last sell that we had before a major move up. So there was no obvious demand zone beneath this. We could have chosen to pick a demand zone all the way at the bottom here. However, I believe there's just way too much demand in the market currently. We would not be able to introduce enough supply to bring price all the way back down, to disregard all of this structure. So instead, I identified the next closest one, which was this. We can see that price tapped into that. And then this green box here shows an accumulation. Now, one thing not to get too caught up in is some people will just take this area just where it taps in and try and use those lower time frames to find an accumulation in there. So maybe use your 1 minute, your 15 second. Now this isn't incorrect. However, it's not as likely to be the correct entry because we're using such a lower time frame Wyckoff schematic. The structure of that is much less likely to hold because of how much more fractal it is. Now when we look at this as a whole, this whole green box, we can see that this is an accumulation. We've had that spring down here. We've had the test of the spring. So once we saw this, we could have easily identified this last sell as a point of interest, got in off the test, and then that's where our confirmation would be. I personally prefer to do this, use those higher time frame schematics, just because they're much more likely to hold and I find them easier to get an entry on. However, with that being said, you do what works for you, whether that be the higher time frame entries or the lower time frame entries. So moving on from here, we had another impulsive wave upwards. Now this is identified again by the blue box, and within that I found a major demand zone. This was a major sell before our buy. It was the most relevant demand zone in my eyes. You can see the price has just traded back into here. So I'm hoping that on market open, we will find signs of an accumulation in here, be able to get in on some buy positions and ride that up to the final target. The reason why I like this move is just because throughout the start of last week, we did actually create a nice area of liquidity, a big area of inducement. We had many taps off this area. A lot of people were actually looking to be sellers in hope that we would continue what was the bearish structure. Any smart money traders would have understood that we had this demand zone here and that we were ready to reverse the trend. On the flip side, technical traders, they were looking to continue that lower. So from here, this would have been a great position for them to get in on those sells. Exactly why the smart money operators created this level in the first place. We can see that a high volume moved through, cleared that liquidity, as well as creating that next impulsive wave for us. What this has done is it injected some momentum on this down move. You can see that it's quite an aggressive correctional wave, but I am hoping that within this point of interest, we do find enough demand to reverse this, to flip the supply and demand balance back into demand's favor and take that next impulsive wave up. Just keep an eye now on this invalidation zone. If this was to be hit, we would then have to reanalyze this market because this bullish structure would have been invalidated. We'd have to then determine what price wants to do, and I'd more than likely then start looking for sells to ride down to this previous low. Okay, so now I've moved over to the US dollar, to the Japanese yen. Now the reason I like this is because on the higher time frames, we've seen a lot of consolidation. Now, since start of October, about midway through October, we've been stuck within this range And upon analysis of this range, I am seeing what appears to be a distribution. Looking in at this, I was doing analysis back in October, looking for sells here, just because we had this liquidity point, which going back for years has acted as a liquidity point or an area of inducement. And you see this wick here perfectly came to clear that, which was, this area was a lower time frame distribution. So I was looking to get in on sells. I did actually manage to catch this push down, although I was expecting a larger move. We weren't given that. However, we still managed to profit. But as I said, upon further analysis, it has shown to me that this wasn't a distribution. We weren't quite ready to reverse the trend just yet. We are actually within an even higher time frame schematic. We can see within phase A, we've had that first sign that supply is entering the market. And then as we move through, we've got this large upthrust in phase B, which I'm hoping now has cleared all liquidity, because after clearing this initial point, we created more equal highs or other highs within the market. We clear those, clear these highs. All liquidity now to the upside should have been cleared and dealt with. Now price has had this major move lower. It set some structural points in place. Now I believe this is our next lower high. I don't think price has any reason now to move up to this supply zone, just because it set that structural point. As a result, I have two zones in here. I'll drop down the time frames now just to show you exactly what I'm looking for. But the reason I am looking for sales, as I was saying, after this high was set in the market, we came down, we broke structure to put a lower low. Now potentially you've put a lower high in place, which does give confirmation of bearishness. So moving into price as of current, we are sat within our upper bounds and lower bounds of the trading range. So our support level and resistance level within the trading range. Now we have this major supply zone, evident by the fact that we did have a distribution here. And after that, a heavy rally down. So there is going to be market imbalances, market inefficiencies that need filling. So I can expect price to trade back up, filling those inefficiencies, as well as mitigating any positions that were opened by the smart money operators in the process of reversing the market here through the use of Wyckoff schematics. Now, on top of that, there was a hidden supply zone. This was identified as low as the 10-minute time frame. Now we can see that price perfectly wicked into this. Now after wicking, we set a low. We then came up, set a lower high, a lower low. But as of recent, price has come and it's broken this lower high in the market. So we're just going to have to watch this one. There's no obvious positions coming as of yet. But longer term, I'm hoping to be a seller in this market. I think the fact that it didn't hold this high could tell me that we do actually want to now run and mitigate this position up here. Maybe within this process, what we're going to do is create areas of liquidity around this area, create some inducement, get more liquidity into the market, clear that, which should then in turn bring more supply and help that longer term bearish move start. So I've just dropped even lower again, just to finish off. You can see exactly why, to me, this was a hidden supply zone. You can see we've just got this one buy candle before another heavy sell-off. Now, this is what's known as a drop-based drop, and it can act as a great point of interest, a great supply zone. Exactly why it was marked up. We can see what happened afterwards was really nice as well. We had this nice level of liquidity, a level of inducement, before we had that injection of momentum, and then that move lower to clear all downside liquidity as well. But as stated, we have just broken this structure. We'll have to see now what price does. The fact that it has broke this structure does confirm shorter term bullishness. So just make sure that you're analysing this market on the lower time frame and see how it reacts when it hits this zone here. I have my alert set about 114.03, waiting for price to tap into that. We'll see what happens if so, and hopefully be able to get involved in some sell positions. So that's going to conclude my section within the Sunday session video. Apologies that there's not as many pairs analysed now. I know in the past I've typically gone through 3 or 4 markets. However, I do so in quite a rushed manner. Now this time I wanted to take a step back and try and provide a bit more information, a bit more of an insight into why I'm looking for the trades I am. In that way, I believe it just gives you more value, more knowledge, so that you can go away and apply that to your charts. But with that being said, thank you for watching my section.
How are we getting on, guys? Luke here. I hope you enjoyed the analysis that James provided for you today. And now, as always, we're going to move over to my analysis and give you my insights on the market for the coming week. Now, like I have done previous weeks, what I'm going to be doing is going over a pair that I analysed last Sunday sessions video and going over how my predictions went. So, as you can see here, we are looking at the Great British Pound to the Japanese Yen. And if you remember correctly from last week, I did say that I wanted to see price break above this level. And then once that's happened, look to enter in on a position to capitalize on some pips. So the prediction that I made originally was for price to break above at this point. Obviously, we had a failed breakout. Price came down, tapped back into demand, and then it started producing nice bullish structure. Now, last Sunday sessions video, I did say that I am predicting the markets to push up above this point and start setting new bullish structure, higher highs and higher lows. And again, like I said, once it broke this point, I'd be looking to place my buy positions. What I'll do now is throw up a clip from last week's Sunday session just to show you guys that my predictions were correct. On this pair, I am biased to a buy, and I am looking for price to break above this point, finish its retest, and then look to place my position on the start of its next impulse going up. So as you can see from that clip there, we did predict this movement to happen. Now, if you did watch that Sunday sessions video and you did capitalize on a buy position, you could have made a lovely 160, 170 pips in little over a day. Now, this was a lovely swing and we predicted this perfectly. Now, what are my predictions for this pair for this coming week? Well, I'll be completely honest with you. I don't really have the greatest of ideas, but just looking here on the 1 hour time frame, so breaking it down to the lower time frames, we have seen a break in structure. Obviously, it failed to set those higher highs, so that tells us retail traders, us technical traders, that there could be a potential reversal, potential bearish structure forming. Now, another thing that kind of gives me that confluence is we've had a break back below this previous highs, this previous resistance, which was then acting as support. It's broken below, it's then retested, and it seems to be setting a new bearish structure going down. So this is essentially a break and retest. Now, this is another indication, a clear bearish move, in which case, if I do place a position on this pair this week, it will be to sell and it will be to short. In order for me to place a short position, I will probably wait for a retest. So I'll wait for price to come down. And once it starts retesting, as soon as I see the retest end and start the next impulse down, that's when I'll be jumping on to a sell position. If I wanted to capitalize on a sell position before that, I could essentially wait for a break below this point, which is acting as, a small level of support. And once that's happened and I see clear bearish structure forming, I could then jump on a sell position. So it'll be interesting to see how this pair plays out in this coming week, and then we can reference back to it on the next Sunday session. So now moving on to my analysis for the week. The first pair I'm going to be analysing for you guys today is XAU to USD, which is the gold to the US dollar. Now, looking here on the 1 day time frame, we can see that the market is clearly bearish. If we look from here down to this point, this price here is obviously a lot lower than this price here. Within this price data that we are seeing, the market has been bearish. There has been some bullish moves like this and like this, but it has been predominantly bearish. Now, what are my thoughts for the coming week? Obviously, we always say your trend is your friend and you should follow the trend. So we will be looking at placing some short positions, as I do believe this bearish move is going to continue, especially after what I have seen here on the lower time frames. So let's take a look. So looking here on a lower time frame, this is the 4 hour time frame, we can see how we had price tap into this trend line that we had drawn out on the higher time frames. So once we had that tap into this price and we saw distribution take place, we then saw a massive sell-off, which was brilliant. We managed to capitalize on that. And since we have kind of seen price consolidate, and some would call it an accumulation, as price did tap down into this level of demand, and then we saw price come back up, touching into supply. Now, I have marked out these two areas as they are of interest to me. So they are my points of interest. They are things that I reference back to, and they are areas that I look out for. So my thoughts are this exactly. We had the tap into demand, clearing that liquidity to the downside. We have then seen a lovely push up. We've had that tap into supply to clear that liquidity to the upside, giving those institutions and those big banks and corporate companies a better price. And now I feel like we are going to see gold plummet. I think we can expect the price of gold to fall and continue to fall, breaking below this previous level of demand, potentially breaking and retesting, but then continuing to set lower lows. Now, another thing that is giving me this bias is this candle here. This candlestick is actually called a doji, and this is a formation that forms at the end of a bullish or bearish run, and is essentially an indication of a reversal. Now, we've seen this candlestick form once it's tapped into this area, which gives me that added confluence that, this bull run is over and it's the start of a bearish one. So my 3 bits of confluence that I have for this pair are: 1, the overall trend is bearish; 2, we've cleared liquidity to the upside, it's tapped into supply; and 3, this candlestick formation here on the 4 hour is a doji, and this represents a reversal in current trend. And then we can see how price has started to look bearish. So those are my 3 bits of confluence for this pair, and I will be looking to place a short on this pair this coming week. Okay, so now moving on to the Great British Pound to Canadian dollar. Looking here on the 1 hour time frame, we can see lovely bearish structure, and then we can see a break in that structure. Why? Well, because it's failed to set a lower low. So that tells us retail traders, again, there could be a potential interruption, there could be a potential reversal, and as a result of that, we could see a new bullish structure. Now, in order for me to place a buy on this position, I will want to see a break above this point, just because this is acting as a level of resistance. As you can see, price has failed to break above this many times, and it seems to have acted as an area at which people have entered those sell positions. Now again, I will be waiting for a break above this point. Once we have that break, I will be looking to place those buy positions, trying to ride it up as far as we can above this point. Obviously, this is a long shot and this is a long way away, but catching as many pips as possible is our aim. Now, I've marked out this area, as this area marks out the last low that this pair has produced. So therefore, it is acting as a level of demand. So now the only other alternative is if price fails to break above this point once again, we will be looking to capitalize on a short position, and this will be acting as our area that we would want to close our position at in or before. Now, I truly believe this coming week that this pair is going to be bullish dominant, and we are going to see lovely bullish structure form as data comes in. So I will be looking for those buy positions this coming week. Now, we can expect price to retrace before its next impulse once we have a break in this structure, and that's exactly where I'll be looking to enter. So once price is breaking above, retested, once the retest is finished and the start of the impulse is underway, that is when I'll be looking to execute my buy position, keeping my stop loss nice and tight just below the trough, the end of the retest, and keeping my take profit within reason but as high up as I possibly can. And then as new price data comes in and the market starts to produce in higher highs and higher lows, I will be trailing my stop loss, putting my stop loss just below each low that forms as the market brings in new data. Now, these are the only 2 pairs that I am looking at this coming week, but I think it's really important to focus just on a handful rather than a bunch, because you can quite easily get swayed and easily distracted and miss those opportunities. So I think it's really important to find those things that are really screaming out at you and taking full advantage of those, rather than trying to jump in on multiple trades throughout the week. Now, the great thing about me and James working together is he often looks at different pairs to me. There are a few occasions where we look at the same pairs and we have different biases towards them, but this week we are looking at completely different pairs, so we have twice as many opportunities to look forward to. Now, if you guys have any questions about the analysis that I have provided or James has provided this Sunday session, please drop it in the comments below and we will be sure to get back to you. And if you agree or disagree, again, put it in the comments. We'd love to see what your feedback is. And if you haven't joined the Learning Lounge group chat already, follow the link in the description. It is free and we put out loads of analysis, loads of educational content, and we even put some of our potential entries on trades that we are placing ourselves. I just want to say a massive thank you for watching, and I hope you have a profitable week. And we will catch you later on in the week with our Wednesday Learn to Trade video and our Friday Trading Couch video.